Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button, subscribe to our channel, click on the bell button and choose all notifications to receive financial updates from our channel at the earliest. In this video, we'll be talking about 5 stocks from Angel Broking which are their top picks for FY19. Also friends, if you are benefited by the content on our channel, please don't forget to share these videos because it could also be beneficial to others who may watch it. Please watch this video to know more. Now the first stock on the list is Music Broadcast Limited, which is available at Rs 365.50. The face value for the stock is 10 and the target price here has been set at 475. The symbol for this company is RADIOCITY. Now Music Broadcast Limited, formerly known as Music Broadcast Private Limited, owns and operates the Radio City 91.1 FM, which is a frequency modulation radio brand. This is also involved with the running of planetradiocity.com, which is a music portal. Now the 1-year chart would reveal that this company went on a slow uptrend for the first few months of the year, but since then has largely been flat. The market cap of the company is 2085.35 crores, which means that the company is a borderline stock between a small cap and a mid cap. The EPS is 7.00, which translates into an expensive price to earnings ratio of 52.21, which is much more expensive compared to the industry PE of 46.12. The book value is 96.07, which translates into a reasonable price to book ratio of 3.80. The company did not pay out any dividends and the promoter holding is a strong factor for the stock at 71.40. The 52-week high for the company stands at 459, whereas the 52-week low for the company is at 333.50. Now friends, Amarjit Maurya of Angel Broking believes that the radio industry is protected by licenses for 15 years, thereby restricting the entry of new players. This would support the existing companies to strengthen their position and maintain a healthy growth rate. It has grabbed the number 1 position in Mumbai, Bengaluru and Delhi in terms of the number of listeners, and this is helping MBL to charge a premium rate which results in higher EBITDA margin of 33.6% compared to 22% of ENIL. Moreover, Radio City posted a 6-year CAGR of 12.1% compared to 9.1% of the industry owing to higher advertising volumes. Now capex for 39 licenses have been done for the next 15 years, hence no heavy incremental capex requirement would emerge. Moreover, the maintenance capex would be very low at Rs 5 to 10 crores. Now due to all these factors, this company would have sufficient cash flow to distribute as a dividend. They have a buy recommendation on the stock with a target price of Rs 475. Now the second company on the list is Navkar Corporation Limited, which is available at Rs 162.30 and the target price here has been set at 265. The face value for this stock is 10 and the symbol for it is NAVKARCORP. Now Navkar Corporation Limited is a holding company. The company is engaged in container freight station operations and related activities. The company is focused on capitalizing the available opportunities in the logistics space in Western India. Its principal products/services that it manufactures and provides includes cargo handling, cargo storage and maintenance and repair of containers. Now the 1-year chart is not a very bright one and you will see that the company has been on a downtrend. The market cap of the company is 2442.93 crores, which means that the company is a mid-cap one. The EPS is 6.57, translating into a price to earnings ratio of 24.70, which is much cheaper compared to the industry PE of 50.11. The book value is 82.39, translating into a price to book ratio of 1.97, which again is on the cheaper side. The company did not pay out any dividends and the promoter holding is strong here at 69.03. The 52-week high for the company stands at 247, whereas the 52-week low is 146.70. Now Navkar Corporation Limited is one of the largest and one of the 3 CFS at JNPT with rail connectivity, helping it garner higher market share at the port. Now this is in a massive expansion mode where it is increasing its capacity by 234% and coming up with an ICD at Vapi. The ICD with rail link should benefit from first mover advantage in a region that has huge market potential and accounts for close to 27% of volumes at the JNPT. Now, South Gujarat volumes will now head straight to the Vapi ICD. Thus, the company can now cater to bulk commodities and domestic traffic that it has been rejecting owing to capacity constraints at CFS. They expect Navkar Corporation Limited to successfully use its rail advantage and scale up its utilizations at both JNPT and Vapi ICD. They have a buy rating on the stock. Now, the third company on the list is Diwan Housing Finance Corporation Limited, which is available at 625, and the target price here is at 720. The face value for this stock is 10 and the symbol for it is DHFL. Now, Diwan Housing Finance Corporation Limited is a deposit-taking housing finance company. The company focuses on providing financing products to the lower and middle income segments in India, primarily in Tier 2 and Tier 3 cities and towns. Now, the one-year chart would reveal that this company went on a beautiful uptrend towards the start of the year, then consolidated, and after that it went on a correction. Of late, however, the stock has again seen a spike. The market cap of the company is 19,622.50 crores, which means that the company is a mid-cap one. The EPS is 37.37, translating into a price to earnings ratio of 16.74, which is much cheaper compared to the industry PE of 24.45. The book value is 292.31, which translates into a price to book ratio of 2.14. The debt to equity is 9.6839, which is on the higher side, whereas the return on equity is 0.1445. The dividend yield provided with the company is 0.64, whereas the promoter holding is below average at 39.23. Angel Broking says that backed by healthy capital adequacy and increasing demand for home loans, DHFL's loan book is expected to report 23% loan growth over the next 2 to 3 years. Now, DHFL has sold 50% stake held by it in DHFL Pramerica Life Insurance Co. Limited, which added Rs 1,969 crores to its net worth and increased its capital adequacy ratio by 400 BPS to 19.3%, which should fuel growth for the next 2 to 3 years. Strong net interest margins on the back of lower cost of funds and lower credit cost will ensure healthy return ratios for the company. Despite strong growth, the company has maintained stable asset quality, and Angel Broking expects the trend to continue. They expect the company's loan growth to remain steady at 23% over the next 2 years, and earnings growth is likely to be more than 28%. They maintain buy on the stock with a target price of Rs 720. Now, the next stock on the list is HSIL Limited, which is available at 384.75, and the target price here has been set at 510. The face value for the stock is 2 and the symbol for this stock is HSIL. Now, HSIL Limited is an India-based company which offers sanitary ware, faucets and glass bottles. The company's segments include Building Products Division and Packaging Products Division. Now, the one-year chart can literally be broken down into two parts. The first part where the company was on an uptrend, but since then, in the recent market correction, this company has severely underperformed. The market cap of the company is 2,781.60 crores, which means that the company is a mid-cap one. The EPS is 11.29, which translates into a price to earnings ratio of 34.08, which is expensive compared to the industry PE of 30.56. The book value is 200.57, translating into a reasonable price to book ratio of 1.92. The company has a dividend yield of 1.04, whereas the promoter holding is just about average at 48.43. Now, Angel Broking expects the company's market to grow at 10% CAGR going forward on the back of increasing disposable income, urbanization, evolving preferences and government initiatives such as Swachh Bharat, Housing for All, Smart Cities, etc. Now, this company is expected to launch security caps and closures in first quarter of FY19, which would be able to generate revenue around 130 crores on the full operating basis. Moreover, HSIL is also entering the PVC pipe segment, which is expected to start commercial production in FY19. The company has entered into new segments like consumer, pipes and caps and closures, which will drive further growth. They recommend a buy rating with a target price of Rs 510. Now, the final company on the list is Siaram Silk Mills Limited, which is available at 651.25, and the target price for this stock is set at 851. The face value for the stock is 2 and the symbol for it is SIYSIL. Now CRM Silk Mills Limited is a holding company engaged in manufacturing fabrics and ready-made garments. The company is engaged in the textile business. The company's portfolio include yarns, home furnishing, retail, ready-to-wear and fabrics. Now the one-year chart would reveal that this company has been on a beautiful uptrend, but it's only recently that this company has been consolidating in the recent market correction. The market cap of the company is 3052.41 crores, which means that the company is a mid-cap one. The EPS is 22.88, translating into a price to earnings ratio of 28.46, which is a bit cheaper compared to the industry P of 30.26. The book value is 127.29, which translates into a price to book ratio of 5.12. The dividend yield is 0.46, whereas the promoter holding is a strong factor for this stock at 67.07. Now Angel Broking says that SSML has strong brands which cater to premium as well as popular mass segments of the market. Further, SSML entered the ladies salwar kameez and ethnic wear segment. Going forward, they believe that the company would be able to leverage its brand equity and continue to post strong performance. The company has a nationwide network of about 1600 dealers and business partners. It has a retail network of 160 stores and plans to add another 300 to 350 stores going forward. Further, the company's brands are sold across 3 lakh multi-brand outlets in the country. At the current market price, SSML trades at inexpensive valuations and they have a buy recommendation on the stock with a target price of Rs 851. Now friends, please don't just jump in, please go ahead and do your own research. Also friends, this is not our own research. This was part of an interview which was carried out on a financial news channel and we will be providing the link in the description section below. Please go through the link to build more conviction around your buy or sell decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.